All right, today is March 28th, and this is the market recap for Friday. We had a extremely bearish day today due to what London session left us. So let's get to that time frame. So here in the hourly, I actually was bullish, I think, today. Um, I was bullish because I trusted what I know about London session, but my gut was telling me bearish. Reason we play bearish today is because, well, overall, we're playing bearish, right? Um, we swept liquidity here, tried to escape, I'll say, and then we came all the way back down. But more important, in my opinion, is what's happening right here. Price expands lower, right? There's no liquidity down here, right? So the only reason for it to reverse right here is to play bearish. If it took liquidity, it could fully reverse. But because there was no liquidity taken, it is most likely a retrace. Now, another confluence is this 1 hour fair value gap right here. This rejects the price once, twice, three times, and then sends it lower. So basically, with this 1 hour fair value gap, my bias, in hindsight, 100% bearish, right? Um, Something that I did learn today and this week was to look for the higher time frame draw on liquidity. Now, today, with since this low right here took no liquidity, right? No liquidity was taken within here. This is a retrace. And with the reaction off this, what is the liquidity for us to take on the hourly time frame? Because this is respected on the hourly time frame. If you look lower, the only liquidity we have is this one, right? So this would be my draw on liquidity for the day, at least for AM session. Now, if we go into the 15-minute time frame, it even adds to that, right? So London session told us that with that 1 hour fair value gap right here. Now, closer to New York session, another confluence happens. We get this bullish expansion on this green candle right here, validated with this closure right here, once, twice. Actually, no, that's not validated. This one is though. Boom, closes perfectly in it and closes outside of it on the upside. Validated in my opinion. Then we break down to the downside, create an SMT of these lows, which then causes us, boom, to come back up into it and use it as an inverse. Then, a couple minutes before market open, we come down. Market opens, we come down, take out this liquidity. I'll go into more detail with that on the lower time frames. We expand lower, knocking out, just so you can see, liquidity, 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 and of course, that one's the same as that. Liquidity down here at the end of the day. Lunch didn't reverse. It tried. This macro, as you can see with the 11 o'clock hour when London closed, tried to retrace, really did, but it just didn't. There was too much sell side momentum. So that pushed us lower. Algorithm kicks back in. We come up, take out buy side liquidity if we are going to assume now that the draw is down here. With a sweep of this liquidity and a strong continuation, the next draw on liquidity is down here, without a doubt in my mind. So, with a sweep like this, if we block out this whole part right here, and we're just looking from this line right here left, we took out this liquidity over here, and then we continued to draw lower, right? In my opinion, if we sweep something and then immediately show a change in market structure or change in the state of delivery, whatever you want to call it. But if here, for example, if we hit this and then started playing bullish, I could be okay with a reversal, complete reversal, play bullish. But since we're looking at this line right here, and everything past that liquidity is continuing to drive, we are going to assume that we're going to continue that drive to the next liquidity, which is down here, which we do end up hitting. 5 minute. Not much more on here besides what was previously said on the 15 minute. SMT of these lows, it's not marked, it's marked in the 1 minute. So let me paint this picture. Market opens, spikes down, sweeps this low, immediately comes up off of it. This is what I meant on the when I was talking about the 15-minute time frame about the lack of continuation, right? We sweep this low and then we immediately come up off of it. Reversal or retrace, right? But since we boom swept it and immediately came up off, we're going to come up here, react off this 5 minute fair value gap as well, because this 15-minute is reacted off of here, right? This is the main one that you see on the 15-minute time frame. But we come up once again to touch it, as well as this 5 minute, and we expand lower, tagging all these liquidities. Sweep this liquidity, try for a retrace, fail, break down. 11 o'clock macro starts to reverse. We take out buy side, immediately fail. If we zoom in here, once again, take out this high, total lack of continuation, right? If we expanded higher above this, I would have liked to see a larger retrace, but the fact that we didn't tells me that we are still trying to play bearish, and that lunch session will most likely not retrace that high. So let me break down, sweep this low, retrace, 5 minute for value gap, sweep this low, or sorry, there's no low there. Sweep this low, retrace, 5 minute, come down, retrace, come down, lunch ends, PM session starts, algorithm kicks back in. We're assuming the draw on liquidity is down here, this blue line. So we come up, take out these highs right here, take out opposing liquidity before continuing AM session's move. Now, I know I've said a couple times today, you take out a low and you immediately come up off of it is a sign of a retrace or a reversal. Question I just came up with in my head is, how do you know when it's a retrace versus when it's a reversal? And the answer that I came up with in my head is the higher time frame draw, right? Again, if we look at this low compared to this low, there's nothing in between them. I mean, there's minor lows like this one and this one and this one, but nothing on a high time frame that is going to affect price. So once we sweep this right here and then continue lower, my draw is now immediately this down here. So with that in mind, once we sweep this low, I'm not looking for a reversal because I know that higher time frame, we're aiming for that lower liquidity. So we retrace, as well as this failure up top to continue. So we retrace, boom, 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 whatnot, and we end up sweeping this low with that draw on liquidity in the end. Now here's all those SMTs I was talking about in the morning. This is where I was a little confused, right? So we have this hourly and this 15-minute inverse and whatnot, but I see this huge SMT down here. Right? I see this huge SMT and I see this move up here. I said, okay, this is a very large SMT for such a small move. We've got to continue higher. That's not the case, right? We get an SMT of these highs, and as you can see, even on NQ where we did take out this high, we did it with very little conviction. We just spike up there. There's no closures, there's no nothing that is a sign that we want to continue. Plus this SMT tells us that we're going to play bearish. So that plays bearish. Market opens here, this candle. We come lower, take out this low, create this SMT. I was actually trying to get in a buy here because, like I mentioned, this high time frame SMT made me think that we're going to be bullish. I tried getting in a buy here, but I was one tick away from getting filled, which is unfortunate. Then we came up, reacted off this 5-minute, like I said earlier, on the 5-minute time frame, created this SMT, and then broke down. This is one of the higher time frame trades you could have taken on the day. There was a 1-minute inverse fair value gap on ES. Now that is not the trade of the day in my opinion, because it's really, really long. But it is still a very good trade nonetheless. You could have easily gotten a 1 to 4 just by targeting, I don't know, I'm not going to scroll all the way over there, but one of these other liquidities, right? We displaced lower using this fair value gap here. During the macro, this is when the move really kicks off. Take out all these lows down here. Sweep, retrace, push lower, retrace, and then here's 11. So this is when we're looking to reverse or retrace on the market. We start this move, take out this high, barely, no conviction, come down. Try one more time. Take this high, barely, no conviction. SMT of these highs, SMT of these highs tells us, okay, we're most likely going to play bearish from here. Why? One sweep, no conviction. Deep retrace. Two sweep, no conviction. And SMTs. So, with these SMTs and a 15-second fair value gap after a change in the state of delivery, which I believe happened at the low of this 1-minute candle right there, this would be an entry. Stop would be above this high here, because I believe there was another fair value gap above this 15-second, and you have to allow price the opportunity to go to it. So we would have gotten filled right there, and then we would have targeted lows here, right? Lows here for a 1 to 4. So even that in itself would be a good trade. But if you're targeting total external lows at this point, seeing that price is failing after sweeping, meaning it's going to have a continuation to the next high time frame draw on liquidity, which is down here, you're going to be riding this one out all the way until even after market close. But even if you closed it when market closed, that would be right here, which would be roughly 412.25. Oops. Still a 1 to 15. So very, very good. So we take this 15-second, ride it lower, 1 minute for value gap, 5 minute for value gap, 5 minute for value gap, 5 minute for value gap here. Now, one thing, algorithm kicks back in, like I said, seeing this dive here after taking the past drawn liquidity, we can assume that the next drawn liquidity is this. With that in mind, in our failure to retrace lunch, or reverse, or have a deep retrace of lunch, whatever, you know what I mean. This bullish run here is only telling me, all right, we're taking this high. That's literally all it's telling me. It's telling me we're sweeping this liquidity. If it wants to come sweep these, perfect. But it sweeps this, continues playing bearish. If you look here at 3 o'clock, just took out lows, just took out highs here. We could rest up here, but again, high time frame, drawn liquidity is down there. We reverse this, and then we just seek lower and lower. Ended up taking out this. Now, something on the higher time frame that we should look out for. You'll notice here how ES takes out this low, right? Notice this, Thursday, March 12th at 1 p.m. Thursday, hold up, that was just not right. What? Sorry, Thursday, March 13th at 1 p.m. Now, if we go to ES, Thursday, March 13th, 1 p.m. We have an SMT here. Now, is this a retrace SMT? I believe so. Um, for two reasons. One of them being it's Friday, and with a huge expansion on Friday, we are most likely going to see some sort of bullish price action on Monday. An SMT of these lows would support that. Reason two, this right here is an SMT as well. So NQ sweeping this low and ES not does make sense, right? Because on NQ, this low is roughly where this one is, and it does sweep it. So I think this SMT is an SMT, but I think it's only one that will cause us to retrace higher. And I say retrace. So I'm thinking Monday, Tuesday, we play bullish, aiming here. We look on the weekly time frame. Bang. So what do we do this week? We opened here, rallied up, weekly inverse fair value gap here, weekly fair value gap there. Tapped both of those, shot down. Didn't take out this weekly low. If we look on the higher time frame, this is the draw of liquidity for now. Daily time frame. The only reason for us, so okay, another thing. This is too high time frame of an array to be respected for us to fail on such a small SMT, in my opinion. And by fail, I mean completely reverse off of it. Do I think we're going to see some bullish price action off of it? 100%. 100%. We might even get back up to the new week opening gap of this week. But high time frame, sorry to be flipping through a million different time frames. High time frame could be targeting this low, but I think this is our target. Sorry. I think this low right there is our target. Right there. I could see us sweeping this low, stopping at constant encroachment, and playing bullish from there. Do I think this is going to be a sustained bearish run? Maybe. These lows look really nice to me. All I'm going to say. So, all that to say, this week has been bearish. We ended with an SMT. I think that SMT is going to aid us in a retrace on Monday, so we can continue bearish for the rest of that week to target these lows here. This has been your market recap for March 28th, 2025.